Hello and welcome to etcfo.com by the Economic Times. And you're watching a special show on decoding Trump tariffs. In this particular show, we will try to focus on the impact of US President Donald Trump's reciprocal tariff on India and on the Indian economy. My name is Amol Dethi and I'm editor for etcfo.com and etbfsi.com. Let me introduce my panelists first, specifically the speakers who are going to give meaningful insights on this particular show. My first speaker for this particular session is Mr. Madan Sabnavis, Chief Economist at Bank of Baroda. Madanji, glad to have you.
Thank you.
My next speaker is Mr. Alok Singh, Group Head Treasury at CSB Bank. He's a veteran in the treasury space, worked with SBI for a long time. Alok, glad to have you.
Thank you. Thank you, Amol.
And we have a CFO from actually the life science space, or you can call it also pharma space indirectly, Mr. Nitin Kumar Parekh, the CFO of Zydus. Nitinji, glad to have you.
Yeah, thank you.
So to begin with, there are 2-3 quick bullet points that I have. I think we all have deliberated a lot. Maybe must have gone through a couple of reports since the reciprocal tariff news came yesterday. But I think still there is a slight confusion whether it's 26% or 27%. We do not know what exactly is the scene because order said something, Mr. Trump said something else. That is one bullet point. Second is I think market has taken it quite seriously, except the pharma stocks, not only just Indian markets, but markets around the globe. There are a lot of economists which had said that there will be an impact of 30 basis points on the GDP. That is the second point. And, more importantly, I think when you look at the tariff, there are 2-3 quick, maybe softer side of news headlines that I really liked. First is by the SBI chief economist who said now the Trump is going towards maybe from make America great again to make America alone. That is one interesting headline. Another headline is दुश्मन ना करे दोस्त ने वो काम किया है, considering Trump said that Modi is. And third headline I'm seeing everywhere is tariff करो क्या उसकी जिसने इसे बनाया. Interesting thoughts here, but let me ask my speakers, what do you think about the Trump's tariff? How do you see it impacting on India and translating on Indian economy? Madanji, I will start with you.
Yeah, thanks, Amol. See, the way India is going to be impacted, there are two ways of looking at it. One is to say what is going to happen to my overall GDP growth. Now, India is largely a domestic-oriented economy. When I say domestic-oriented economy, that a large part of our demand, which generates our GDP, that's our consumption and investment, come from domestic sources. So to that extent, there's a bit of insulation which is there from whatever is happening out here. But this said, we cannot ignore the fact that America is our major export destination, accounting for around 18 to 20% of our exports. And therefore, if there is any kind of a slowdown in terms of a growth in exports, it would tend to have an impact on our overall GDP growth. So our estimate is that GDP growth could fall back by around 0.2% in a worst case scenario, assuming that our exports to America come down by around 10 to 15%. This is where assuming that America starts producing all the goods, because if you look at the way in which India's tariffs are positioned, we are at 26% is lower than what it is for the other developing countries with whom we compete. Maybe with countries like Japan and the European Union, our tariff of 26% is higher. So that's one thought. The second thing where we'll get affected, I think it's more in terms of what happens to the financial markets, because today we're not quite sure if the dollar is going to get stronger or weaker. My sense is that with inflation going up in the US, there is a possibility of the Federal Reserve being slow on interest rate cuts, which means that the dollar could get stronger, in which case the rupee starts weakening, as will happen to other currencies too. So there'll be considerable turmoil in the Forex market is my major concern out here. Besides overall global inflation, where we're not quite sure if prices are going to go move up or down, because if the world is going to go towards a recession, then probably the prices will come down. But in case we see prices going up, there are competitive tariffs which are imposed by other countries, then global commodity prices could go up. So I would say, broadly speaking, GDP, we may not be affected that much, but in terms of markets, commodity markets, as well as currency markets, there could be a repercussion there.
Noted your points, Patanji, and I absolutely copy your point on the Forex market turmoil side. Alokji, let me come to you and take your view.
Yeah, thanks, Amol. So, The first question is, does America need to do something about its economy? Yes, it
Mhm.
needs to do something because they have high debt, high deficit, and things like that. Is tariffs the answer that America is looking for? So no, tariffs are not the answer, because what has been done is like a signboard, don't call me again kind of a thing, like tariffs of 50%, 60%. What they foretell is that don't do business with us. Now, so it means they are disruptive and they are upending. So whatever the World Trade Organization and globalization that we have seen in last, say, 4 or 5 decades is like putting an end to it, where America was at its center. So now, why probably Mr. Trump was forced to do it? Because what we have seen that in recent, uh, or say last 1 decade, basically, they have been losing out to China in terms of business, and there is a sense that you know China is taking advantage of America's spending power and things like that. So that's why you see the kind of tariffs that have been applied on China. So now then it brings us to the next logic, that if this tariff game is purely because of business, or it is because you America wants to have 2 3 trading partners of equal nature instead of having just one, which is China, and which has been supplying to it, say, majorly around 70 to 80% of imports in certain categories come from China. So if that is the case, then probably the negotiations will happen in the coming months, and probably these negotiations will then result into 2 3 trading partners at equal footing with the US. That's something which is still in open. And how will it impact? So why I say, because these are disruptive and these are not the answers, because what Mr. Trump is trying to do is very long term. If you bring manufacturing back to US, it will take 3 to 4 years to produce any results. And in
Right.
these 2 to 4 years, his term may be over. And what will happen right now, like Mr. Madan just briefed, that inflation will go up for almost everything in US, and US economy will shrink. It will have counterintuitive effects on the global economy as well. So it will also have to face some reduction in GDP for the next 1 year or so. But what I believe is that parallelly, I mean, bilateral agreements will happen and people will try to switch over from, say, US dependence to other. So if you
Hmm.
equate to a recent event that has happened, I mean, going back, I find it very similar to what US did when it put sanctions on dollar movements for one
Right.
particular country. And then what happened? The world took note of it and they said, "Oh, we should not be dependent on dollar, uh, say, transactions forever. We should find some alternatives." So this is a
Hmm.
similar kind of a event where world has taken note now that we cannot be US dependent, and it will have more negative impact for US than the rest of the world. That's
Right.
what I believe as a brief, outcome of this.
Yeah. I think that was meaningful one, Alokji. I think uh, most of the companies, economists, analysts will go back to the drawing board, boardrooms. Policymakers also will do the same thing and try to understand, how the impact will translate and what could be their strategy, perhaps retaliation strategy, or how will they retaliate. So you're right, I guess. Noted your points, friends. Those who are watching this can also shoot their questions either on the social media platform, or you can simply post your question in the comment to any panelists, or you can just shoot your question directly. Nitinji, let me come to you from an industry perspective. How do you see it? And specifically, your industry is quite in the news now.
Yeah, so fortunately, Pharma is under the exemption order right now, and therefore Pharma is not included in the tariff list. Having said so, there are always still rumors that whether this is a final decision, interim decision. So we'll have to see how the things work out. But so far as Indian economy is concerned, I believe that
Nitinji, can you hear us? I think Nitinji, maybe there is some network issue with him. Once he's back, maybe I will take his view again. But Madanji, let me come back to you then. And the immediate question that I have is, I mean, though Mr. Trump has been talking about, tariffs, and he said that he wants to make America great again. Do you think that the logic he has applied to come to maybe 26%, 27%, 10% as an average or a base is quite meaningful? Or he has just, looked at the data and maybe made it to half, 52%, wahan pe ho raha hai, so, let's make it 26%. Do you see any logic in these data points? Because while one point we agree that yes, the US tariff is quite low compared to what we charge them, but there are forex charges, there are convertible charges, there is a depreciation appreciation value, and most of the currencies are quite lower compared to the dollar, right? So do you think it's a thoughtful decision?
So I think they had to use some kind of formula. I'm not too convinced that this is the best way of doing it, because it's very difficult to actually calculate what is the duty which India is charging to any particular country, for that matter, or any country charges. So they're also talking in terms of the physical barriers which are there to trade, as well as any kind of disruptions which we're causing in the currency system by keeping the currency overvalued, undervalued to get an unfair trade advantage. And in order to represent this, from what I've believed, this formula which has been put up is you look at the deficit with US and divide it by the exports to US, and you say that is the overall level of tariff which is being imposed by a particular country. 50% of that is what is going to be the reciprocal tariff which America is applying. So I don't think this, I don't know how convincing it is. I'm not too at least convinced about this particular formula, because I think one needs to get into greater granular details. But the fact that they've run it for 180 countries means they've used the simple thing of the export import and the deficit of a particular country with US, and then accordingly came up with this particular number. But I think the way in which Donald Trump is thinking is that he would like everything to come back to America. So he's driving out the migrants so that you're able to create jobs for your own people. You're trying to make everything get produced in the US, so therefore you're trying to keep commodities out by putting in these high tariffs. So while theoretically somebody could probably defend it, but I think it's not something which can be accomplished, because I don't think, as what Alok was also saying, it's not possible to ramp up your facilities for everything, because if it could be done earlier, they should have done it by now. The fact that you're not in these commodities and you are making use of other countries for importing goods itself says that there is a certain, it's a non-economic way of doing it. The scales are not really there for them. So I don't think this kind of thing will work, and I think this is something which could be self-defeating. Again, I think what was mentioned by Lok, I think it will lead to higher inflation, probably a slowdown in the economy. And at the end of the day, you may just feel that, look, is it really been worth? Have we actually managed to achieve anything in terms of getting jobs as well as bringing about growth? But I think it just falls in with the kind of articulation he has been indulging in right from the time he went in for the elections, in the campaigns, Make America Great Again. So I think this is the time. We actually weren't quite sure about what he would actually do, because he was supposed to do certain things in March. Canada and Mexico still get left out from this list of 180 countries. Things have been deferred, but now he's actually shown that he's going to do it. But what it will do, to my mind, is that countries will start talking to each other. There will be more alignments taking place, more alliances between various groups of countries in order to make sure that we're able to further trade through bilateral or multilateral arrangements.
Yeah, I think there is quite relevant one. I think Nitinji is back in the window. Nitinji, can you hear us? And can you continue with the
Yes,
pharma
yes.
perspective that you were telling? Yes.
Yeah, I can hear you. So
Sure.
I mentioned that pharma is currently under the exemption order, and well, it is whether intermittent time or final time, only time will say. But having said so, let me give you some numbers regarding pharma industry. So India currently has import from US, which is about 800 million US dollar, and the maximum duty rate there is 10%. Some of the products attract duty rate of 5%, and there are about 150 products which are completely exempt from duty. What it means that the blended rate of import duty on US pharma products in India is less than 10%. So on a fair ground, the duty incidence should not be more than that. While currently it is 27% across, across the country for many industries. On a very fair basis, since the pharmaceutical products of US also attract less duty, there may not be any duty. Also, we believe that the duty, if at all, is levied on pharmaceutical products, maybe for more of innovator drugs rather than generic products, because India has the cost advantage. Because of that, only India is able to get good market share in US. Almost 50% of the generic products come from India, and almost 90% of the prescriptions are for Indian companies, Indian generic companies. It shows the strength of the our industry. When you look at the exports from India to US of pharmaceutical products, about 8.7, 8.9 billion US dollars, so more than 10, 11 times the imports. So currently, as the bilateral discussions are also going on, if at all required, our Prime Minister may also look at, whether there is any relaxation required in pharmaceutical products which are imported from US to give a level playing field. So we believe that pharma would not possibly be caught in that. But let's visualize the situation that if at all pharma also has this kind of duty rate, then we also believe that maybe 60-70% of that can actually be passed on in terms of the ultimate prices to consumers. Partly maybe borne by the channel partners, and maybe some share can come to manufacturers. Having said, the generic industry, the way it operates in US, we call it a gross to net ratio. So, for example, the MRP and the actual price, for example, my price is 25, then MRP can be 100, which is the 75 is in a channel. Part of that retained by channel partners, part actually passed on to the consumers. So even if let's say 25% duty is put, 25% on my 25 is 6.25 only. Now that to be passed on within that 75 margin is not very difficult. So it's quite possible that this may still be in a position to be handled. Having said so, I have a lot of faith in the bilateral part, our Gandhian philosophy. While many other countries, including China, EU, and Canada, have talked about retaliation measures, I think India believes in reconciliation measures and having a business-like approach, which would work well. And given that our country, relative to other countries in other industries, is much better suited on a comparative cost advantage, comparative basis, because of the duty structure and the duties levied on other countries, I think many industries India tends to gain in terms of comparative advantage. And later on, I believe that in ultimate analysis, the laws of economics we allow to prevail. I mean, history suggests that, for example, I had read that somewhere in 1930s also there was smooth Havle. It was no more smooth, but smooth Havle tariffs were which actually aggravated the Great Depression. So while we can forget history, laws of economics are not to be forgotten. So in the ultimate analysis, cost efficiency and market dynamics and market equilibrium only has to work, and therefore, in all probability, after about maybe 6 months, 12 months maximum experience, many of the measures, either because of retaliation or because of reconciliation by other countries, reversal may also take place. I'm very optimistic about this.
Okay. That was a 360-degree view, Nitinji, I think, and I like this point, retaliation and reconciliation. Noted it. Let me come back to you again with some specific questions. But Alokji, I wanted you to tell us, where will be the major impact? Already, the jewelers, the minerals, and the mid-cap companies are what you can say, must say, top in the list in terms of the worry factor. They are worried a lot. And I think there are a couple of people who also wants to know more on this side. So I will read out a question which is asked by Devang Sarvagi. He says that if a 25% import duty is imposed, 25, 26, similar to what has been levied on steel and automobiles, will it lead to a margin pressure of 5 to 10%? Or will the industry be able to pass it on and even on more to the cost? Alokji?
Yeah. So if you look at our exports to US, I think electronics and engineering goods are the the highest that we export. Then comes gems and jewelry, and then some pharmaceuticals and things like that. So so let me be honest about India's position here. India is very well poised in a sense that we can have immediate negative impacts So that is what Mr. Nitin called as retaliation. So there is, say, suppose there is a tax imposed, and the whole world is, now reacting to it. So we will have a immediate impact, which may cause certain, say, many economists are, say, expecting from 30 to 50 basis point dip in GDP.
Yes.
But in parallel to that, what is happening is that we are in a very great position to catch up to our competition. When I say competition, I mean the other countries that have been exporting larger amounts, or say larger uh, dollars to US. So, but this will take time. This will take maybe from a 6 months to 1 year period where all the negotiations take place, and the so as a thumb rule, if you look at the things as they stand right now, what you pointed out, auto and industrial sector like engineering goods and all, are the first major component which will see an impact, a direct impact. So cost wise, so the idea here is tariffs is not to make things costlier, say export costlier, or rather import costlier for US. The idea for the US is to disrupt, to make it to a halt, and then negotiate. Now, when they negotiate, how do you negotiate? Whether, say, a particular Indian company is willing to, say, manufacture in US some part of it. I'm saying Indian, but it applies to whole globe. I mean, say
Yes.
China
Yes.
or anyone else. Now, all these negotiations will take place. That how are you, say, on at the global level trying to help America by bringing jobs here, or say if you are exporting, say $10 billion from your country as an example. How can you then manufacture in US, or can you shift one industry to US, or some component manufacturing to US? Things like that will take will get under discussions in the coming months. In India, the discussion has already started. So we are in a sweet spot where the immediate impact, and that relates to all the financial markets, dollar, rupee, everything else, and to industries, specific industries as well, where they will feel the impact immediately. The impact will continue. The impact, when I say, it's a negative impact, and the impact will continue for another maybe 3 months, 6 months. I mean, it's just a guess. And then the equilibrium will start to set in, because the
Right.
trade cannot stop. I mean, the goods and services that are being consumed, the medicines that are needed, the cars that are required, you cannot put a brake to it. I mean, people cannot start riding cycles, and they cannot do without medicines and things like that. So they cannot be permanently stopped. So there has to be a equilibrium which will be reached in a certain point of time. I mean, that point could be 3 months, 6 months, but certainly, and India will be, I think, in a beneficial position with all this exercise taking place. But to the specific query, I think engineering goods and auto stocks will take a beating right now.
Okay. Okay. So I have been also hearing a lot. There are a lot of CFOs and the economists also said that this could be an opportunity for India. And Nitinji, you spoke about competitive advantage and how you look at positively. Obviously, pharma is exempted, so we can see some positivity on that side. But if you look at the other sectors, uh, what kind of challenges, immediate challenges that you see CFOs and specifically the India Inc. will face now? Do you see their export will come down significantly? Do you see perhaps they will not manufacture those many goods which are going to US right now? How do you see the whole industry? Uh, how do you see the Trump's decision getting translated into the industry? That Alok ji mentioned some time back, all these engineering goods and all this.
Yeah, Amol, the ultimate impact would obviously depend on sector to sector. For example, textiles and garments, footwear, etc. They are now going to have this duty. But at the same time, currently, the garments, Vietnam, Bangladesh, Cambodia, these are also the large producers of garments, and they have a larger duty incidence, which gives a better, competitive edge to Indian manufacturers. While there would be certainly temporary impact, I think
mm,
given the whole range of duties and the industries and countries covered, every
mm,
country, every industry, every company possibly is going to
mm,
go to the drawing boards and say what does it mean for them and how do
mm,
they take care of their own situation. The
mm,
same holds for country level, industry level, company level.
mm,
Even some companies will decide at the product level what products they should continue, because some products may be low margin, some products may be high margin. Again, some of the manufacturers, for example, having a long term contracts, if
mm,
their contracts are on a long term basis on a FOB prices basis, they need to
mm,
go back to their contracts and say that they are anyway having the FOB prices which are fixed prices. The duty incidence is anyway on the importer.
mm,
So one will have to work out the solution based on one's own situation and competitive edge. Initially, there was going to be some turmoil, some pain, but ultimately the things are going to fall in line, because one, India has a strong domestic base. I
right.
think a lot many things are done and being done and will be required to done in terms of ease of doing business in the country. But we have a
Mm,
strong domestic base. We have a diversified trading relationships outside US also, which can be
mm,
strengthened, and there could be some more bilateral arrangements with other countries, non-US
mm,
countries, which can also work out a way in terms of our growth plans. And as I said, that current ongoing negotiations with US in terms of Mission 500 for 2030 is also
mm,
likely to ease out certain pain in a near term. And therefore, as I mentioned earlier, I am very optimistic about India ultimately turning out to be a winner in this process. So there is an opportunity amongst the adversity.
mm. Nitinji has maybe a great medicine of positivity. You during this turmoil that you are discussing. Good to know that, Nitinji
We are
noted that.
we want to be in pink of health, and we want the entire country to be in pink of health.
Sure, sure. We all will need that vitamin positivity for sure. Uh, Madanji, now a very important question to you, and which partly touched in your first opening remarks. We have seen a great depreciation of rupee in 3 to 4 months, December, Jan, Feb, March. And now because of this, we are seeing, volatility in the market, and specifically Forex and, the Asian stock market as well. Today itself, Sensex is down almost by 1,000 points, some 950, if I'm not wrong. What kind of impact do you see? Because the Forex market will be volatile. What kind of impact this volatility will, make specifically on the businesses? And if you look at the Indian businesses, not many of them are in great shape already. I mean, fortunately, the bad loans are not there, but the expansion plans are also not there. Private capex are also not there. So, do you see challenges? Will be humongous for the Indian businesses because of this too strong volatilities now.
See, I think there are two issues here. See, one, when you're talking of forex volatility, I think that is the major concern which I do have, because we have seen that the dollar has been alternating, becoming stronger and weaker, and that has created a lot of problems, not just in the forex market, but also in the money market in terms of liquidity, RBI coming and doing all kinds of things to ensure it's stable. So, in fact, contrary to what Nitin is saying, I'm slightly a bit more cautious when you're talking of an opportunity for India, because just look at the situation. We are competing with certain emerging markets who probably have higher tariff rates. So let's just assume there is a case of substitution which could be taking place.
Right.
Now, wouldn't it be natural that there is going to be a kind of a currency war which will go on? So I think almost every country would like to let their currencies depreciate. So that,
Yeah.
I think, is one of the major fears which is there, which will start off with China, and China does everything in a big way. So I think whenever we're looking at this particular tariff, this entire thing, the whole thing is that is America going to import less, in which case everybody gets affected? Second, is there going to be a lot of substitution taking place because the America, let's assume that the quality, the products are identical. Then if America decides that I'm going to import from India rather than Vietnam, as far as ready-made garments are concerned, because they're coming at a lower price, that's good for us. But then Vietnam is not going to keep quiet. They may try and do something on the currency front.
Yes.
There could be a case of them also doing something on the price front to make sure that you cut down on your profit margins, but make sure that your exports go up because they're dependent on exports. So I think this is one major concern which is there. Second, I think the other issue which is there is that, well, at a macro level, I don't see a major harm for the Indian economy. We have, as I said, 0.2%. Some are talking of 0.3, 0.4%. But I think it's something which can be managed. But at a micro level, I think that's where the issue is. Because if you look at our exports, exports, 40% of our exports are coming from the MSME segment. Now, when you're talking of
Yes.
things like precious stones, you're talking of ready-made garments, you're talking of some engineering goods, they're all coming, a large part of that comes from the MSMEs. So I think their health is something which could get impacted. So as far as the banks are concerned, we need to be more watchful about what is happening in these sectors. Because definitely there will be a bit of turbulence. Now, whether the output is going to fall, the exports are going to become zero, will it fall by 10%, 20%? It's not something which can conjecture right now. But it will suffice to say that individual units in these specific industries are the ones who could be facing the pain. And since there's a large concentration in the SME segment, this could be another area of trauma for the SMEs once again. And this is something as banks we need to be cognizant of, because when we're talking of quality of assets, right now it looks at the corporate as the book is very good, but MSMEs could create a problem. That is something which we'll have to be a bit more cognizant of.
Hmm. No, certainly. In fact, I wanted to come back. I wanted to, specifically come on MSME. Thanks for touching that. Yes, and yeah, I mean, I think we can see the currency war, coming up. Alokji, I also want you to add specifically on the money market and the currency war itself, because I'm sure the treasury departments and the transaction departments at every company will have a tough time now hedging the currencies, as you see the volatility, strong volatility in the forex market, right?
Yeah. So interestingly, what you say, Amol, there is a thought in the market that these steps are also taken to to devalue the US dollar. So if you look at US dollar index, the XY that is being followed throughout the world, it went up to 108 and all, and uh, America was losing in terms of exports because the dollar was appreciating like anything. And if you look at it today, it had come below 102. It was 101.40 or something in the morning. I have not seen it right now. So, and if you go back few months or say rather few quarters, everybody used to think if DXY crosses 100, then it used to trade somewhere 93, 94 kind of a level. And there was thought in the market that if it crosses 100, everything will fall apart because then the world or say US will not be able to sustain the kind of levels that it will reach to. So, appreciation of dollar per se is not very good for US. And what these tariffs are going to do, since they are causing a disruption, they will certainly weaken the US economy. I mean, so you can adjust the impact going forward in few quarters. So we are looking. So there is a thought that the inflation will go up, but the immediate impact could be that the Fed may be forced to cut rates for in next 2-3 quarters just to align itself with the falling GDP numbers that may come now. So what it will entail is that kind of currency, not currency. I mean, you can say currency war. I don't like the word war in country parlance, but all like Madanji just pointed out, all countries will be forced or trying to devalue their currencies in this war of business where everybody is so trying to be competitive on pricing.
Okay.
So in the global market, the currency level plays a very significant role in deciding how competitive or how pricier or how cheap you are in terms of doing business, and that's the key thing. So this will certainly entail a volatility in the currencies. It's going to be a tough few quarters going forward, where we will see sudden spikes like we saw in euro in last 2 days, and what you mentioned a few minutes back about our
Yes.
own currency INR. It has gone to 87.90. Now it is below 85. Right now 85.13 or 14 kind of level. So you have seen a 3 rupee move maybe in a period of 2 to 3 months, which is not good for any exporter, which is not good for any importer, which is not good for any country, because you cannot take a decision. You cannot. So, like what Nitinji would be thinking that, okay, I'm pricing, say, suppose my 1 year cash flows at 84, and suddenly you see it going to 87. So you go back to drawing board and then you do something at 86 half or 87 again. And 1 month down the line, you are again sitting at 84. So
Yes.
I mean, that creates a kind of volatility which companies don't like, and they don't want to again realign their profitability and expenses and all other things again and again, going back to deep. So these are the things which are going to be, so they also inherently are a cost. So what happens that, all these treasuries, corporate treasuries, they do hedges when they are not working properly, or levels reach to a certain cross certain levels, they again go and re-hedge. And also these are dynamic things, and the more dynamism you bring into a corporate treasury, the cost goes up. So this all is going to add up. And coming back to our own currency, say like your question on INR. So USD INR, I believe in the short term, since the impact would be there, and historically we have seen that if the US economy weakens, the INR depreciates, because that code and sneeze idiom that so that effect causes it to depreciate a bit. So my personal view is that next quarter or so we may see a slight depreciating trend again in the INR because of whatever is happening. But the second aspect of it, India catching up and being in a sweet spot, uh, if US goes down, there could be the money that has gone out of India may try to come back in again, because fundamentally, like Mr. Nitin just said, India has nothing wrong in terms of
Right.
fundamentals where the economy is concerned. Madanji may put final details there as far as economy is concerned. So, and RBI has taken steps also. So what I believe is that going forward, say if you leave 1 quarter to 2 quarter, the timing is just a guess. After
Okay.
that, we see a appreciating trend in the Indian currency because of the inflows and India catching up to rest of the world in terms of all these negotiations and other things.
Certainly.
Liquidity, yeah. So liquidity, we have seen RBI taking a very proactive and I would say uh, uh, surprising steps. Surprising, I would say, because we did not believe that RBI would come forward and handle it so proactively. So they have done OMOs, continuous OMOs, and they have announced OMOs for April itself, which was a surprise, which has brought the 10-year yields down by 10 basis point. Because April, we believe that some money that has gone out from the system in March in terms of taxes and other things will come back, and liquidity takes care of itself. But RBI has shown that they are proactive and they are there to make the liquidity easy. And we also believe that it will be followed by the rate cuts. So the whole liquidity scenario, I mean, the availability of money to the corporates and the banks will be smoother and will be at a lower rate going forward. So that's
Okay.
what I believe largely in terms of liquidity.
Certainly. I mean, yes, RBI's OM calendar was quite surprising. I have a couple of questions from the audience as well. So there is one question, and this is specifically from Nitinji. The tariff are imposed can be, if tariff are imposed, can large generic companies gain market share from large foreign manufacturers, or will it result in improvement in long-term competitiveness? Nitinji?
Yeah, this is an interesting question, and I think pharma companies are contemplating the different kind of scenarios, considering the import tariff which are levied in other countries, and when you look at U.S. generic industry, while Indian companies obviously are on the top of the chart, there are other companies from, let's say, Israel or other Western European countries. Some of them would find it difficult, to continue with their existing products, given the cost advantage which in India we have compared to them. Obviously, our margins are better. So, with the duty incidence now, they may find certain products not viable at all and may go out of market. US generally has seen maybe 125 to 175 kind of products in shortages if you look at last 10 years history. And therefore, when other companies go out of the market, it would then create shortages and obviously opportunity for Indian companies to get market share. And also, US is a very free economy that way. It works on the demand and supply principles, and therefore there could be chance of even getting a price increase apart from the market share. But I was, quite surprised and found the interesting discussion when Alok ji and Madan ji mentioned about this interest rate and currency part.
Hmm.
I think
Hmm.
we are, fraught with working with, three, four variables at a point of time. While in schools and colleges, we, took up bio discussion of AX plus BY equal to Z kind of thing. We have, interest rate, we have inflation, we have exchange rate, and then one versus another. For example, our RBI is obviously taking a lot of proactive steps, but
Hmm.
when some other companies, central banks also take the steps,
Hmm.
partly neutralize the impact of what Indian bank has done. You are, in terms of one versus another, how everybody else does and how we are doing. So ultimately,
Right.
it's the overall strength of the country in terms of managing the finances, managing exchange rate, managing interest rate, managing inflation, which would ultimately say that where we stand vis-a-vis others players in the world.
Right. Sure. So Madanji, my one question is in two parts. First you have already described it well, but if I ask you very very specifically, uh, what kind of impact do you see now specifically on the export? Because specifically the Prime Minister and Government of India was quite bullish with Atmanirbhar Bharat kind of agenda, Vikasit Bharat agenda to boost export, which looks like now will be on a pause mode. So what kind of direct impact you see in numbers on export? That is one. And second, I have been listening a lot, not from obviously this panel but many others, that India's export is not very very significant compared to many other countries, but America being a superpower, we are quite aspirational to go to USA. So on a different note, isn't it an opportunity loss? Because a lot of startups and fintechs and new age companies are planning to set up shop in America, which perhaps will, take a pause. So I know it's two different thoughts, but if you could, guide us on that.
See, if we're looking at exports, I think we have not been an export-oriented economy. So when I started off by saying we're a domestic-oriented economy, exports are something which have been supplementing our growth, but it's not been the engine to growth. If you compare ourselves with, say, China, or you talked about Thailand, Korea, Malaysia, where exports have a much larger share in growth. Now, this said, I think we have seen that our exports have been struggling in the last few years. The government has been trying to make sure that we get into part of global supply chains, which basically means that you become a supplier of intermediate goods as well as final goods to other countries. That's how you're able to grow your businesses. But we have seen that ever since we had COVID, there's been a slowdown in the global economy. Global trade in general has also slowed down. There's been concentration in terms of exports in certain products where we've had this advantage. But let me give you an example. When we had the case of the problem which was there in Bangladesh at a political level, there was this whole thing of saying that will India take over Bangladesh's role? Because if Bangladesh is a supplier of ready-made garments and textile products, can India actually substitute? And in the short term, can we actually make major gains there? But then I think when you talk to some of the textile companies in the south, what we realized is that look, we don't have the capacity. So that came as a kind of an interesting thought to me, saying that even in case there's an opportunity, do we have the capacity to scale up? So I think that goes back to the problem of saying where we are located in the MSME sector, that scaling up kind of reforms kind of thing, which has to get kind of radical change, which has to take place, has not yet taken place. But if you're looking at other sectors, like I think pharma, for example, I think Nitin can talk better about that. I think that India is a major leader out there. When you're talking of electronics, yes, again, we're a leader out there. So I think there are certain specific products where I think exports, if at all, now of course pharma is exempted, but I think in these, even in engineering, I think we have made fairly good inroads, which means that any kind of cut in terms of imports from America is something which is going to affect our overall exports. So that's the first part of it. Now, if you're talking of the second part, I thought that, see, what we're doing of export, I think one opportunity which would actually come up is that I don't think America is going to produce everything on its own. The whole idea is that it would like to attract foreign investment so that Indian companies have an opportunity to set up shop in the US and then you produce goods to sell there. Just like how America has actually done the same thing in China because they found it to be more efficient. They're trying to get people back into the US. So it's not just a case of US production going up, but there could be an opportunity in terms of Indian companies which are probably looking to invest overseas as a part of their diversification plans, could probably see an opportunity out here. And I think in terms of services, that's not a part of this particular thing. I think that is something we should probably carry on in the normal course.
Okay, okay. Noted that. It was again meaningful, Madanji. Alokji, a very important question now after discussing impact, its translation, and how the whole country is shaping up. If I ask you specifically, where is the silver lining now? Because we are a growing country, we are a developing country, we are looking for funds, we are still looking at FDI and FII far more aggressively. FDI is down, that's a different story altogether. We need private capex. Uh, Against this background, and now this is a turmoil, where do you see a silver lining?
Okay, so Madanji gave a very pertinent example of
Yes.
Bangladesh. So uh, now opportunity comes. Whether you are ready to take that opportunity or you are politically ready to take that opportunity, that's the question. Now here, you see there is silver scattered all around. I mean, you can compete with China, you can compete
Hmm.
with Vietnam, you can compete with Indonesia, but we cannot only, so India as such cannot only look at US. You know, uh, we have, so there are bilateral relations with as well. I mean, we are trading more with China than we are trading with US. So do we
Right.
substitute our trades with China in comparison to US? No. So there are so many equations, so many moving parts right now, which I mean, with negotiations and with time will emerge in a particular shape of things, where I think bilateral relations will take a major role than the global scenario of World Trade Organizations that we had for many, many
Hmm.
decades right now. But coming back to the silver lining, so it gives us an opportunity to look inwards. Like our commerce minister made a statement yesterday, which has been gaining traction since, on our startups. So it gives an opportunity to look inwards as to say, Nitinji knows it better, because what China is, say, supplying to US in terms of
Hmm.
pharma component, is
Hmm.
India ready to supply?
Right.
So in terms
Yeah.
of, say, what Vietnam is producing and giving to US, is India ready to produce and supply? So we
Hmm.
may have advantage in terms of manpower, we may have advantage in terms of resources, but have we thought in terms of being competitive in those particular areas, or we are only happy with what we are doing? I mean, we have,
Right.
okay, very good service industry in terms of, say, software industry. We may have some engineering goods which we can make very efficiently, transformers and other things which we are supplying. So having said that, have we looked inwards? Like China at some point of time looked inward, and then it said, I
Right.
will make goods as good as anyone else makes it in the whole world.
Hmm.
So now even their plastic is better than our plastic. I mean, not
Yes.
taking a direct comparison, but just to say. So
Yes.
we have to look inwards, and this gives us a very great opportunity to get into the areas which probably we have not looked at, um, and this gives us a great platform in terms of US coming and stopping others from doing it, and then gives us an opportunity to go there and say, we have this, we can produce it better, we can make it better, and we can give you at
Right.
this rate. So that is a very big opportunity, and I mean, this is not a silver lining, this is a golden lining, but we should be ready to take it. The point is that whether we are ready or not. So the readiness can be political as well. Sometimes we don't take things because they are not politically right. But I think
Yes.
this is an opportunity which is there for our entrepreneurs and all the businessmen there to take it onto themselves. Let's see.
But I
Sure,
think we
sure.
should also remember, but see, Alok, we should also remember that when we think we can be doing this, all other countries must also be doing the same thing. So I think
Yes.
that's going to be the biggest challenge, because there shouldn't be complacency. It is, as an economist, I always tend to be cautious that when you
Hmm.
keep saying silver lining, the thing is that every country is going to think on similar kind of lines. So in fact, what
Right.
I keep expecting is the trade war, the currency war, which could take place, and
Hmm.
that's something which could actually be very, very disruptive.
Certainly. In fact, I like Alok's this line of whether we are ready or we are politically ready. to a different but important things. Well, I think we are just watch is ticking, but maybe 1, 2, 3 last minutes. And if I look at completely as a third party to overall this view, I think we are slightly now moving back to localization. than the globalization, where every country is trying to focus on its own domestic market, which was actually not expected by the superpower itself. But I think that's where we are going. That everyone is concerned about. Sure,
No, no,
Madhavji.
out here, I think, see, the opportunity which is there is the very fact that India started talking to other groups of countries. Countries
Great.
are talking among themselves. I think more bilateral and multilateral agreements are definitely going to get signed. So I think what the WTO has not done, it was a failure. I think Trump has actually forced the world to actually get back into a talking mode. Maybe not with USA, but working on the premise that, look, let's keep US out. Let's see if we're able to further relations. I think India has already done well to talk to the European Union, with UK, probably with other groups of countries. So I think that could be the way forward, where you see how to gain best from these kind of agreements.
Certainly. In fact, you answered the question that I was going to ask. So simple, on what I said is about globalization and localization. My quick question is, since the time is limited, what should India do now? How should India fight back? Should India focus more on negotiating with Trump and what is better for each sector, or maybe they should focus more on developing their own domestic market? Nitinji, I will start with you.
I think both. So India should work on growing the domestic market. Government should work out like PLI, many other schemes to give strength to the domestic market, and also offer new products and solutions. Ease of doing business, focus on infrastructure, focus on sort of less and less regulations. I think those things would be required to give necessary impetus to domestic industry. At the same time, I think the negotiations must continue, and I'm very hopeful, as I initially mentioned, that outcomes of this would ultimately be positive. As of now, if you look at the between US and India, the total business is about 129 billion US dollar, and US has about $37 billion trade deficit in this, which is not a very significant. If you look at overall about 1.2 trillion deficit in US, 24% of that is contributed by China, 10% by Vietnam, and only about 3.5% by India. And that is why you find this kind of different rates for China and Vietnam and some other countries, right? And therefore, when Donald Trump publicly acknowledges Narendra Modi as a great friend, while he does not obey in totality, but that speaks about the kind of cordial relations which you can be encased. And very positively, if I look at this entire chain of events which have happened, while there are obviously disruptions in the first place, is to make every country awaken rather than being complacent about their efficiency and cost levels, and say that ultimate order is that while with the duty structure you can't win over for lifetime, it's important for you to understand your own strengths and play well, so that you are a strong ultimate winner.
Sure, noted your points, sir. Alokji.
So I would say that no matter how much you love or hate US, you cannot ignore it. So it's the biggest consumer, and it has the best of the technologies. It has the best research. They are the best innovator. I mean, no matter how well China is doing, it's only copying what has already been done in US. Uh, that's given. That's why I agree with Nitinji that we have to find a middle path with the US. And the opportunity there is that our share of trade with US is still very low. I mean, we have
Correct.
miles to catch, and this gives us an opportunity to renegotiate in terms of not only with, say, bilaterally with the US, but in comparison with other countries also. Because US right now is in a position, I mean, it has opened up its platform for countries to come and negotiate with them so that he can find the best suitors, kind of a thing. So this has opened up a whole lot of spectrum to us where we can go discuss, negotiate. Probably our leaders are already doing it. So I don't see as a negative thing for India. But having said that, we cannot ignore US also. So I mean, the mistake would be that we start talking to all others at the expense of US. that should not happen, because US is US still.
Certainly. Madanji, any last point on this?
Yeah, we should. I think it should be a two-pronged strategy. One is that way we continue to talk to US, have kind of negotiations, because any kind of reduction in tariffs which we do will actually benefit, because will benefit India also, because we've always seen that the principles of free trade say that if you have less encumbrances in terms of trade, it helps both all the countries. So we would also benefit from it. At the same time, I think the dialogue with other countries, especially European Union and UK, I think these are the big markets, similar-minded kind of countries. I think there is a lot of scope for actually furthering our trade with these countries. So that's what we should do. But we should remember, I'll agree with the other two also, that America is the most important economic partner when it comes to FDI, when it comes to FPI. So therefore, that should continue. We should probably try and make sure that we can reduce the kind of hurt which we're getting on account of this 26%. Can it possibly be lower to a lower number in case we bring about certain kinds of negotiations here? That should probably be the way forward.
Certainly. I think the time is up, but I must say thank you so much for sharing those valuable insights on this particular platform, vtcfo.com. Thank you, Alokji, Madanji, and Nitinji for sharing those relevant thoughts, and thank you so much the readers and the viewers for tuning in. Stay tuned to etcfo.com by the Economic Times. We have done a number of stories on the Trump tariffs, its impacts, and the implications. Thank you so much for tuning in.
Thanks for having me.
Thank you.
Bye.
Thank you, Amol.
Thank you, everyone.
Bye bye.